This video, this channel is sponsored by the XX Network, so I have a bias towards the XX Network. I am not a financial advisor. All investments have risk.
As is the microcosm, so is the macrocosm. As is the atom, so is the universe. As is the human mind, so is the cosmic mind.
I mentioned about tokenization. Okay, as I said, I believe in 5 years' time, there will be a tokenized kind of financial world and then the traditional account-based financial world. Okay, going further, I don't know. Okay, but I believe the tokenized world will come very fast.
Shu PU LI works for the Central Bank of the UAE. He's an advisor. He formerly worked for the Hong Kong Monetary Authority. Hong Kong is a financial hub. Prior to that, he worked for JP Morgan, which is a global bank. He believes in a 5-year run rate where we will live in a tokenized world, and it's going to happen, quote, very fast. He is talking about crypto assets. Later in the speech, he references Bitcoin and the fintech revolution that has come from Bitcoin.
Okay, these are driven by the fintech, those innovations. Okay, so if we don't provide, as I said, the medium exchange for them, they will use stablecoin or whatever crypto for the clearing settlement and as a medium exchange.
So right here, quote, they will use Bitcoin or stablecoin for clearing and settlement. So he's clearly talking about crypto innovation, altcoins, etc. He's not talking about some private permission thing. He's talking about ledgers with tokens. That's why he's bringing up Bitcoin and stablecoins.
So if we continue separating central bank from that kind of development, even the conventional financial institutions, they're looking at tokenization. As I mentioned, tokenization of deposit, loans, securities, whatever financial access the asset they may have. So we cannot wait and see.
They need central bank digital currencies in order to interoperate with this new system. The tokenized future is happening with or without the central banks. Even conservative banks or conventional banks are looking into tokenized assets, loans, securities. The central banks can no longer segregate themselves from this world and must provide ways to get their product, which is debt, into these markets. There are trillions, if not quadrillions of dollars in the traditional markets. This wealth is going to make its way to the crypto world.
Okay, we got to get ourselves prepared from a regulatory perspective, also from an infrastructure perspective. So I think we need to integrate. I don't think we have a choice. Otherwise, like when Bitcoin came to life, a lot of central banks struggle. How can we deal with that? Some of them ban them. Some of them, just turn a blind eye. We don't see that. So I think we got to get ourselves prepared.
Some central banks turned a blind eye to Bitcoin, while others tried to ban it. Crypto isn't going away. The only choice is to integrate. From regulation to infrastructure, they're preparing because it's coming.
This fintech kind of evolution is coming, and I spoke with a lot of global banks. Okay, I'm actually from one of the largest U.S. banks before joining the central bank. I keep the dialogue with them.
He's from one of the largest U.S. banks. He keeps a dialogue with them and knows what is happening behind the scenes. He's telling you that it's going to happen and it's going to happen quicker than anyone anticipates. He's in front of his colleagues and other central bankers giving this speech. He would not risk his reputation or career unless he was certain. He continuously mentions Bitcoin, so he's not talking about siloed digitization. He's talking about crypto assets. This entire system is going to migrate into the tokenized world.
And these are coming, okay, tokenization of the entire banking financial system.
Any of the protocols that interact with this traditional wealth, whether it be layer 1s that house the wealth or dApps that exchange the wealth, is demand for tokens. In order to do anything on the ledger, I need a native token. These are institutions that will use tokens as they buy them. They're not concerned about price. They need the tokens in order to move their value or do anything with their value.
Okay, that we can ignore that, but in 5 years' time, we will struggle.
We're going to see a push from central banks to issue CBDCs. The banking system is moving forward with this innovation, and central banks need to be a part of it. It's not like they can compete with innovation. They're economists. They can offer their fiat, but they're not going to be responsible for the protocols. That's where the private sector comes in, and the protocols that can take the wealth and do something with it are the protocols that will win.
And fond memories of in-person events. And thanks so much for inviting me.
Thank you very much, David, for your presentation on eCash 2.0. We look forward to working together with you, maybe on the Digital Currency Global Initiative, and how to bring this maybe to some of the work that we are having in the different.
I'd love to collaborate with you guys, and I have a bit of a team who's working on this with me, and and we have some major partners and so on, and so I would love to collaborate. I mean, it's.
The International Telecommunications Union is a branch of the United Nations. This interviewee asked David Chum, founder of Elixir and the XX Network, to collaborate in their Digital Currency Institute.
What if the world, all the leaders, all the central bankers in the world actually know that this is the end of this current experiment and they want to transition us into the new system and retain their power?
A reset is not a conspiracy theory. It's happened. It's going to happen again because the debt is unsustainable. Now, I don't know if there's some hidden power structure that controls the world or imbeciles that don't understand, or a combination of both. But fiat has always returned to its intrinsic value, and this time is no different. While they're moving to a new system, it's easier to default on the old currency. A new token can be a new currency. But even if that doesn't happen in the short term, crypto assets solve a lot of pain points that are baked in. With this innovation, the wealth can be efficiently managed and moved, removing the gunk in the system or the friction.
So part of what always happens during these transitions are wars. But if you look at what's been happening for really quite some time, especially since 2008, don't we seem to lurch from crisis to crisis to crisis, keeping everybody off balance?
It feels like that to me, yeah.
Exactly. So what if it's not really them versus us, but everybody, all the central bankers and the governments working together to create this transition? I know it sounds crazy.
There are catastrophic consequences to the debt problem. Historically, when these events have taken place, we have seen a complete restructuring of power. Now we're at these levels again. The last time debt to GDP was this high was during World War II. A lot of what we're seeing is similar to the past: populism, war, geopolitical tensions, high inflations, recessions. These symptoms often surround a paradigm shift. Well, the central bankers are out in the open talking about a new tokenized system. The current economy runs on trusted relationships and interdependent systems. What if you could remove trust and have trustless neutral protocols? A lot of these problems would be solved, from the U.S. weaponizing the dollar to manipulation of the currency.
From the general saying, we could be at war with China by 2025. So, yes, this constant pitting against U.S. versus China, is it all just created and for what, to your point?
Well, for what is to justify the hyperinflation, right? Because war always justifies high inflation. I mean, you can look back historically, and since 1989, I did a whole study on that, where the timeline between wars grew smaller and smaller and smaller, and by 1989, we've been in a perpetual state of war, which has really validated the need for the larger military-industrial complex, as we know. So, we're not going to know the answer to that. We're probably never going to know the answer to it. But it looks like a lot of unnecessary provocation to me.
In order to protect U.S. influence and capabilities, export restrictions have been placed on semiconductors. These key components are necessary for the development of modern technologies and have seen continuous growth over time. Therefore, China has been restricted from purchasing certain types of chips in the United States that could potentially be used in military-grade systems. Fabricated with European equipment, American designs are sent to Taiwan for chip production, as China was historically the largest consumer for these chips. At the same time these sanctions occurred, a four-star general predicted a potential conflict between the two nations by 2025. The threat of war would justify neutral by design trustless ledgers. Now understand that the entire globe relies on the dollar system. There is no timeline. We don't know when the dollar loses its status. However, with debt skyrocketing, the abuse of sanctions, the uncertainty, this is a trend to move away from the dollar-based system. When all value is hosted on ledgers, there isn't a need for a reserve currency. Atomic swaps, bilateral swaps can happen in an instant without the dollar as a middleman.
Because the politician's job is really, and this is true for J-PALs too, well, not anymore apparently, but it's to keep the public calm. It's to keep the public believing that they are in control, that they know what they're doing, and that everything is okay. But, we have the debt ceiling issue looming again. And is that going to look like it did in 2011 when we were downgraded? We have so many different games of chicken going on. The markets versus the feds. I mean, it was, and I don't know if we spoke before this, but last August, when the central bank, first the Fed and then the rest of them, gave up forward guidance, that was the shift to the new, let's keep everybody guessing policy. I mean, there's just too much that doesn't make sense, that is potentially unnecessary provocation.
The chartists are saying we're in a new bull run, but understand that the Fed is tightening into a recession. Times are hard. The dollar-based system I described means the entire world needs dollars and the Fed stopped printing. All over the world they're suffering because the global economy uses dollars and there isn't enough. It's Triffin's paradox happening in real time. This doesn't end with a soft landing. The markets are illiquid and we're breaking above key levels, but the fundamental problem is still here. The economy adjusted for cheap, easy money, and now we have costly, more expensive money. This ends with bankruptcies and systemic failures. When that happens, the Fed will have to print even more money to stop the momentum of deflation. QE and 0% interest rates become less effective, and they have to overdo it for it to work, similar to tolerance with a drug user. But you don't have to take my word for it. Look at the yield curves. This has been accurate 100% of the time in predicting a recession. The US yield curve, the euro-dollar yield curve, and just recently Germany's yield curve. This is the debt market signaling to you that it's expecting severe deflation followed by money printing. The debt market is the largest market. It accounts for the vast majority of wealth. This is the smart money saying we will see a hard landing. Real estate REITs like Blackstone's has closed off liquidation for their investors, meaning if you are a private investor, you can no longer sell your equity in the REIT because of liquidity. The SEC is investigating, but I guarantee you nothing will come out of it. Why? Because it's systemic.
And these coming, tokenization of the entire banking financial system.
A new system is coming. Some digital assets will play an integral role. In the midst of movement and chaos, keep stillness inside of you. Thanks everyone, I hope you enjoyed the show. I've created a new site called dmjr.ghost.io. This is a duplicate of my Patreon. Some really dislike Patreon and I'm having some problems with them as well. So I'm duplicating my Patreon content to this site. This site uses Stripe instead of the Patreon payment service. The content is identical. If you want to support this channel, you can sign up to dmjr.ghost.io or Patreon. The link is in the description below. Thanks everyone.